Hey guys, Carl Allen. I want to do a really quick video for you today. I want to talk to you about investors and what are the two really important numbers that investors want to see when they're looking at your deal and they're looking at your pitch deck. So for most deals, you're going to have a deal stack. So you're going to be paying down a little bit of equity. You're going to have some bank debt probably, could be an SBA loan or something like that. And then you're going to have a little portion of seller financing. So for an equity investor to invest in your deal as your partner, there are two killer numbers that they want to see, right? So let's work them out. So first of all, let's look at the business. So we've got revenues of $2 million. We've got EBITDA, let's say that's $300,000. So it's at a 15% EBITDA margin, which is pretty average. Now let's say you're buying that business for a 3x multiple. So the asking price, the purchase price of that business is $900,000. Assume for now there's no adjustments for working capital or liabilities or anything like that. We're paying $900,000 for that business. So let's say you're doing an SBA deal. So you're going to go down to the SBA, you're going to do that deal. The SBA might say, well, okay, we're going to do a 10-80-10 deal structure. So 10% has got to be buyer's equity, which is $90,000. 10% is a standby seller note. So that means the seller can't receive any payments on that money for typically 2 years. And then the rest of it is going to be the SBA 7A loan program, and that's going to be $720,000, right? So typically now SBA, let's say 8% is the interest rate. So $720,000 at 8%, amortized over 10 years, is going to be about $105,000 per year. Okay, so with me so far? So that's the deal structure, and you're thinking, well, great, I don't have 90,000 bucks. I need to go and get an investor to partner with me in that deal. So let's say you approach me and said, hey, Carl, I've got this deal. It's a great deal. It's in my buy box. I know I can scale it. I've got all these plans and all these things for it. I just need $90,000. So I might say, okay, I'll look at the deal. I'll do the $90,000, but I want 15% of the business, right? So I want 15% of the business to give you the $90,000 equity check. And then let's say over a period of time, let's say it's 5 years. So 5 years later, you've grown that business. You've grown it to $4 million in revenues, right? Okay. Now, as you scale a business, a lot of things give you economies of scale, right? So it doesn't matter what type of business it is, your cost of goods sold will come down as a percentage of revenue because you'll get better terms with volume with your suppliers or your services. And then your overhead can flex. So you might stay in the same premises. You might not hire a lot more people to scale to that level. So to go from 2 to 4 million, your profit margin is probably going to go up from 15% to as high as, say, 25%, maybe higher than that, right? So at $4 million of revenues, now we've got a 25% profit margin. So that business is now cranking out $1 million of EBITDA, right? And although we bought it at a 3x multiple, as you know, the higher the EBITDA, typically the higher the multiple, we're probably going to want to sell that business for at least a 5x multiple, right? So we sell that deal. The asking price then is $5 million, which is 5 times the $1 million of EBITDA. But then we're going to have some debt still sat in the business from this SBA loan, right? So halfway through, let's say we still owe $400,000 of debt. So now we've got a debt-free, cash-free exit of $4.6 million, right? And then 15% of that, what's 15% of 4.6 million? I think it's $690,000 if my mental math is correct, right? So $690,000 is the exit. So I've put $90,000 into this deal for 15%, and then we've scaled it, and then we've both exited together, and I've got $690,000 out, which is my 15% of the 4.6 million debt-free, cash-free valuation, right? So now let's do a analysis, right? What are the two numbers that I want to see when you're pitching me this deal. So the first one is I want to see the ROI, the return on investment, right? And that's typically measured as something called cash on cash. So it's the 690 that I'm taking out of the deal when it sells, divided by the 90 that I'm putting in, and that is 7.7x. So I'm making 7.7 times my money in this deal. The second number that I want to see is something called the IRR, which stands for the internal rate of return. You might also see that listed as CAGR, which stands for compounded annual growth rate. So I want to see that increase in profitability that I'm going to make through that investment, what is that like on a compounding basis year on year? And there's a really cool formula for that. It's really, really simple. You basically take the cash on cash number, which in this instance is 7.7, and then you multiply it to the power of 1 divided by the number of years. And in this example, it was 5 years. So 7.7 is the power of 1 over 5, which is 0.2. So the IRR on that deal, if I do my math in my head, it's about 50%, right? It's about 51% is the IRR. I'm looking at deals all day long. I'm investing in deals all day long. I kind of know these numbers kind of off by heart now. So for me, I'm thinking, wow, I'm going to make 50% year on year on my money, which if I leave it in the bank, I might get 0.5%, right? So that would be an example of a killer deal, a strong green light deal for me to invest in. So let's just recap. We went through the deal structure. It was an SBA loan. $90,000 was needed from the buyer. You don't have to put that money in yourself if you don't want to. You could partner with an investor, someone like me. We'll put that in. We'll negotiate a piece of the ownership. We scale the business. We sell debt-free, cash-free. My 15% then comes out to be worth $690. So $90,000 went in, $690,000 went out. That's a 7.7 times cash on cash return for me, or a 50% compounded annual growth, or IRR, internal rate of return, over 5 years. Hope you found that useful, guys. Don't forget to hit like and subscribe. And if there's a burning question you've got that I've not yet covered, type it in the chat. My team will get back to me and I'll do a video just for you. I will see you guys soon. Until then, bye for now.